How's it going, chumps? This is March 1st, 2024. So we're in the first day of March, and we are trying to do a 0 DTE trade on the SPY. I know we have the ES right now. The ES is the S&P futures, the minis. It just gives me historical data so I can take a look into it. Because if you were to go to the SPX right now, there's not much data to really go off of, and it just kind of crams it in the corner. So I just want to just take a peek and sort of figure out what the direction of the market is going to be moving. If we take a look at a 3-day perspective, yesterday was again that melt up that we experienced towards the end of the day. And in the pre-market, right at 5 a.m., just absolutely just dumped, and then built right back up to that level. And we are currently sitting, and while it was sitting right here at open, it just kind of dumped. It tried to go higher. If you look from a 1-day perspective, it did try to go higher, but it just kind of collapsed in it on its face. So the question is, are we going to go lower, or are we going to sort of maintain this level or bounce right off of it? So the real kind of thing to take a gander on is that we have some economic news today. So today we have the global manufacturing PMI at 945, the ISM manufacturing, and then a couple of Fed presidents that will be speaking, but that's not as critical as the PMI and the ISM manufacturing. Those two things happen at 9:45 and 10 a.m. And I think the market is kind of just sort of waiting on that news right now. And we don't want to make a move before the economic indicators are announced. I mentioned that before from our lesson last time. We want to move wherever the market moves, right? Participate, don't anticipate. So we'll just sort of cut to 9:45 and then 10 o'clock. I'll see you then. All right, 9:45, and U.S. global manufacturing came out just slightly higher than what was anticipated. So that means that it's picking up. So what this means is that U.S. companies that are overseas, this is what they're producing. And if their PMI goes up, then that means that basically it means that they're producing more globally, not in U.S. soil per se. At least that's what I think. We still have 12 minutes to go for ISM. That's stuff happening in the U.S. soil, what we're producing. I predict it may even go lower, but its estimation is higher than the previous month. We'll see. And let's just take a look how the market is viewing that. And so far, so, not much in terms of any movement, still grinding sideways. So we'll see from a 10 a.m. kind of position. Zoomed in on the 1-minute candle. Let's do a 3-minute candle. Still kind of indecisive. So 10 a.m. rolls by. If that doesn't move the market, then we'll just basically, decide. Well, actually, looks like we're heading to the sell side right now. Yeah. So market did not like that, right? U.S. companies making money overseas and they're doing well. That just translates to more inflation. That I can see that. So we'll see 10 a.m. for ISM, PMI, and then we'll go from there. And we're back. We are definitely lower for the most part on the more two important numbers, and that makes a ton of sense. We're not necessarily going up on terms of manufacturing prices and PMI. So demand is definitely lower in onshore. So let's take a look at how the market looks at that. And the market wicked at a high just on that news alone. Let's look at it on a 1 minute candle. So what does that mean? That means that if demand is lower, that means inflation potentially could be lower because demand is lower. So also cost manufacturers stuff, their own inflationary pricing, right, is lower as well. So that means there's no excuse for people to, pay more higher prices. That's how you can interpret it. So from that standpoint, I think the market's going to love that number. So what I'm going to do is probably have probably still an iron condor, but leaning more towards the upside. Or what we can do is basically just sell a put vertical for the time being. And then if the market melts upwards, then we don't have any upside losses essentially. So how do we do that? Let's go ahead and pick an account for this position. Let's use the IRA. Oopsies. PX. Go to options chain. And so if our assumption is going to be bullish based off of this information, or maybe not, how is the market reacting to this? If I get a nice big fat candle lower, then maybe I might just stick to an iron condor. Yeah, seems like that the market likes this. The market is liking this. Okay, so let's see here. We have 575 at a 16 delta. I think it'll be bullish, so we'll go with that. And then let's do a 20 wing wide here. So a comfortable room down in the event that it switches direction, but simultaneously 200 straight forward if it moves up. And it uses $1,800 in buying power. If I were to do the call vertical side of this, then it will effectively do the same thing. So let me just remove the legs on the other accounts. Yeah, bingo. I made the right call there. Alright, we'll keep an eye on this, and I'll check in with y'all later. And of course, just as I put the position on, the thing just started puking. So again, it's always that second direction that you have to be careful about. And I could have had way more extrinsic value even if I did the same exact position, but because I rushed into it with that initial move, I always get wiped out on that second move. So the position now is looking like it can still maintain and hold, and I think from here on out we should be okay. But nevertheless, that was kind of like me, again, knee-jerk reacting to that just as the rest of the market was, and then assuming a position. So I'll carry on. Alright guys, quick update. I just did a bunch of stuff and totally forgot to start recording, but the long and the skinny is that those put verticals that I put on, they basically printed. I put 2 on in the morning. One was basically 80%, the other one was like 78% in the money. So the one that was like 80% in the money, following the Tasty Trade mechanic of basically just rolling that over. So collected, I believe it was like $180 in premium, and we have the weekend. So the SPX will just sort of grind, however it'll grind over the weekend, and then considering that the news and the sentiment is pretty bullish for the day, I think it'll just sort of continue to just keep moving forward. Worst case scenario, if I am out of the money, then what I'll do is I'll just continue to roll it down and see if the momentum sort of picks up again from that standpoint. Whereas the other put, I just left it on, and then once I reached sort of this peak right here, it was actually down here, or was it down here? I thought we reached a top by this point in time. I decided to slap on a call vertical going against it to create an iron condor, and then of course got blown out in that regard. The trade's still profitable, but it'll only be max profit if it were to land in the sweet spot, which is a pretty still decent range, but we are running out of some wiggle room and running room down here. So hopefully this trend to the downside continues, and then we'll be able to continue to print in that side. So everything looked together is kind of like this, but we're going to ignore the put positions that I've rolled, and just leave this iron condor here. Similar situations that we have for this particular account. We had two put verticals that just basically printed instantaneously as the market melted upwards. So that was the key, right? We saw that the market was going to move upwards and move upwards violently. We decided to go ahead and just put in the put verticals instead of an iron condor. At least not until we sort of felt like that there would be a top in the market. And the key is that that top has to come before noontime. It's already 11:32, so I decided that's kind of like, you know, the timing of it all. That is probably the smartest play that I've done thus far, modifying this strategy for 0 DTEs. The put verticals are totally fine when they were launched. Similar situation, 80%. I think the other one was like 90% basically in the money. So I decided to roll these positions too. And so now they just have to cook over the weekend. Doesn't matter what happens today. But for the most part, that's kind of where we're at in terms of this trade. I may throw in an iron condor now, but with the volatility that's happening right now, with all the moves that we had, this could potentially just be a sell point for people in the, you know, earlier during power hour, just basically taking profit, and then it'll reach a consolidation point probably around here and potentially maybe bounce up again. Do I want to risk it in that kind of environment? Depends on the account. On the accounts that I feel like that has more risk, yeah, go for it. You know, once it reached sort of like this midway point between where we were gapping lower and gapping up between these two highs of the days and the lows of the days, if it reaches right here, another iron condor might make sense, because at that particular point you have the full range to work with. But since we're trending upwards, maybe you want to do it right here with this pullback. So in the event that you see it consolidating and then try to move upwards, maybe go for something that's like a butterfly or something of that nature, something that's more bullish leaning. I don't know. This is kind of uncharted territory, and at the same time, with the short time frame and the inability to manage it during the afternoon, this is something I do not want to dip my toes in, because the risk to reward is just not there. So that's just sort of where we're at with that, and then we'll keep you updated for the later half of the afternoon. Hey team, just a quick update. It is 2:32, so we got about pretty much an hour and a half left in power hour for the end of the week. Let's take a look, see in terms of all the positions in SPX. So all the positions as it approached towards if there were any call verticals that I put on, I've basically closed them. So then we're only dealing with put verticals now, and we're pretty much oversaturated in that. If I ignore all of the ones I've rolled over for Monday, we pretty much are at a 100% profitability. So if I wanted to, I can just close these trades right now and then just go ahead and deal with that. So first and foremost, yep, close. And a part of me doesn't want to close them because I will be paying for the, I think it's like 65 cents per close. So if I close this right here, right, it's $1.30 plus that. So like we're looking at like a little over $2 just to close the position on top of that. But if I just let them expire worthless, I'll let them expire worthless, and I'm not charged any fees for that. So I think I can just go ahead and just let that expire worthless, because there's probably very little chance that any of these put verticals that have started their life somewhere around here that would be in the money, considering that their strike price is pretty much well below even at the lowest low of the day. So I'm just gonna let that one just cook, and we will keep our $1,500 in profit collectively amongst all the accounts. And yeah, happy days.